All right, traders, welcome to today's recap. This is Christian from Tribeca Trade Group, and it is Monday, September 9th. So, looking at the S&P, basically unched for the day, gave back those early gains. That's something that we've been seeing fairly frequently when we start the day, when the indices start the day positive, when futures rally into the open. So nothing really odd there. That's kind of something that we've been dealing with. But really, what was interesting today was the difference amongst sectors and amongst individual names within indices, right? So sometimes when, even though the S&P is not moving that much, there could be a rotation under the hood. So a couple things may have possibly happened today, and I'll kind of go over those. But I'll start with a tweet that I saw from a couple different people. One of which was Luke Kawa at Bloomberg, talking about long-short U.S. equity momentum pair trade index that kind of, as they say, possibly blew up today. Right, names that funds are possibly short, names that are doing pretty poorly to the downside, where people are short, and names that people have been long, momentum name. Some software names, some credit card names, some even like water names, solar names, a bunch of different names, right? Not just one particular sector, right? And I'll go through some of those areas in just a second. So that may have had something to do with it, but I also think, I know from my background as an institutional trader, what I used to do for a number of years is I was a Delta One trader. Without going into detail what a Delta One trader does, they work very closely with they either trade ETFs, which is what I did, or they work very closely with a portfolio desk. So what does a portfolio trading desk do? Well, a lot of what they handle is index rebalances, right? So what's just around the corner in terms of when the next index rebalances, right? It is, if we go to the calendar here, we're in September. Big index rebalance day. That happens on quadruple witching. That's on the 20th. A lot of people don't talk about it because they don't really know what it is. But what happens is all the S&P indices, not just the S&P 500 itself, but all the equally weighted indices like your XRT, which is your retail ETF, your XBI, which is your biotech ETF. Also, all the growth in value indices, all of those rebalance as well. So what do they do? And it's not only S&P, it's also NASDAQ, all the indices that NASDAQ manages as well, right? And that's a right. So that happens every quarter, and that happens on the third Friday of the month. So that happens in December, March, September. What did I miss? March. June and September, right? So those are the months that it happens, and it doesn't only happen on the day of the event. Why doesn't it only happen on the 20th? Because the trade is too large. So what happens is funds will pre-position. The S&P officially announces what they're going to do. Remember, this is not just like I'm adding a name here and I'm deleting a name here. All of the constituents gets reshuffled, right? Because if you understand what an index does, right? It's like, so SPY, for example, is modified market cap weight. So if you look at the constituents, right, they set those components only once a quarter. Then what's the variable that floats between now and the next quarterly rebalance? Well, that's price. So some names go up, some names go down. What has to happen is those names have to get footed back to their benchmark weights, and that happens on that third Friday of the month every quarter. So Microsoft, so some of these names will have to get sold. And again, we're just looking at the S&P index, but this is every S&P index out there. So it's not just these themselves. But if you look at today's movers, right, and then, of course, just to finish that thought, the losers have to get bought. So what outperformed today? So yeah, a little of this may have been momentum based, or it could be. I don't know 100%, right? Either way, I don't do this anymore. I'm not on a Delta One trading desk. I'm not I don't work on a portfolio trading desk, but I'm just trying to add one and one together. And I think it's too much of a coincidence that we have these rebalances that happen a week away. And I know that portfolio desks will go ahead and what's called pre-position. Once they kind of, usually one specialist will basically work on a spreadsheet that will put all of the constituents together and figure out based on how many assets track each index, right? If there's no assets that track an index, then it's not a big deal. But if you have billions and billions of dollars that track an index, what has to happen is it becomes a very large trade that has to take place, right? So if you look at today's best performers, now, again, part of this could have been momentum because we had several other things that happened today. Interest rates moved up a bit, right? The TLT was down 1.8%. So, naturally, the forces at bay will basically start to go into banks and some of those unloved areas. Also, crude has been up, right? So there's a little bit of a rotation back into energy as well. But if you look at some names, right, that, and again, these are momentum names, but look at what happened to MasterCard today. Now, I actually like this pulling back into support, but, I'm sure that these have been some of the best performers. So I would think that that some of these names are going to have to be sold as well. So could be a coincidence, I don't know, but it could also be just a number of things happening all at the same time, including TLT going down, bond yields going up, oil going up, more money needing to go, people chasing the move in energy a little bit, and then that big index rebalances, which kind of confirms the same thing, that trade has to come undone a little bit, and names like Visa, MasterCard, what's the other? CCI is another one, which is Crown Castle, which has been on a big run. What's the water name that I'm thinking of? American Water. What is that? ATW? Nope, it's a different name. I can't remember the symbol, but let's see if I can find it really quickly. But that name was down huge too. So yes, some of this is momentum, but I think also a lot of it has to do AWK. That's the name I'm thinking of. AWK was down 2.6%. Again, not as much as the software names, but I think that's a good example too. I think a lot of retail traders were just kind of saying, hey, why are all my software names, or why are all the software names going down so much? Well, not every software name went down. Look at IBM. IBM was up 1.4% today. So, some of those lofty names that people have been kind of hiding out in. So I think kind of a number of things kind of came to a head today, but I don't know if it's just straight, a momentum fund having to be unwind and take off shorts and take off longs and kind of get out of that trade. Probably a few different factors in there. What's interesting to me is like an ETF like this was like the worst performer of the day in terms of ETFs, or like one of the ETFs that I follow anyway. This is the IBD 50 name, down 2.9% on a day where the S&P is flat. So a couple of, I'm not going to go over too much of today's option activity. There was a little bit of dip buying and things like Zendesk, ZEN, saw call buying, a little bit of ServiceNow. Some calls went up there as well. A lot of semiconductors also went up in the beginning of the day. But I think the way that you can kind of safeguard yourself against this, right? Because if you had SPY puts, that didn't work, right? So, I think being aware of how your portfolio is situated, not having too many lumpy positions, right? So not having like all eggs in one basket. Also, diversification, right? If you are, even though I'm always honest and transparent in these videos as well as in the trading room, but I don't have any positions on, and I've been very negative on the banks and so forth. But there was all kinds of BAC calls that were bought this morning. So this is an area that's under-owned. So I think it helps to think a little bit outside the box and not always with the herd. Because a lot of those stocks that we mentioned, groups that have performed very well, it gets to be after a while like a herd mentality. And if you don't have any exposure to anything that's in a counter trend, to kind of offset moves like this, and again, this was really odd. This was the biggest move, I think, going back to since 2009, biggest one-day decline for a pair trade. So this kind of seemed very extreme to me, but so meaning not going to happen like this likely again. However, thinking about diversification and so forth, if you had, for example, if you were mirroring what the S&P sector allocations were, you may have been fine in today's. But if you had, more of your positions in even in gold miners, which have done well also too. If you have some gold miners, some medical device stocks, which also got hit over the head today. Medical devices were down 2.4%. Then you're opening yourself up a little bit to something like this when it happens. Again, very rare, but things, overcrowded trades can get unwound pretty quickly. All right, so that's it for today's recap. I hope that added some value to you. There was an article, I just retweeted it out. Michael Burry made this big argument about active versus passive. I don't necessarily share that view with what he was saying, that passive funds are a bubble, right? All passive funds, for the most part, they're just tracking stocks. When people want to sell a group of stocks, whatever they're going to sell is going to go down. It doesn't make, to me, that much of a difference if it's an ETF or if it's a group of stocks. When people want to get out of the market, they're going to sell. And it could be individual names or it could be an ETF. So I don't really go along with that perspective there. One thing that is different versus active versus passive is just what I mentioned, index rebalancing. If you're in an active fund, they are not forced to rebalance every quarter. If you're in a passive index fund, that index rebalancing goes on 100%. They have to switch around their whole portfolio every quarter. Now, if it's a market cap weighted ETF, that's not going to change that much. But if it's an equally weighted ETF, that whole thing is going to change. There's going to be significant changing in that portfolio every quarter. Something to be aware of if you're in ETFs, that this happens under the hood. You may not necessarily see it, but it happens. All right, guys, so that's it for today's recap. A lot to kind of go over, but I hope that helps explain some of today's move in individual stocks. Have a great night, everybody. See you tomorrow.